In this video, we're going to discover some basic guidelines that will help you to understand what is generally required to qualify for a mortgage. However, whether you are able to check all these boxes or not, a great place to start is to simply visit your Encompass Credit Union lender. They will look at the big picture of your unique financial situation to determine if you qualify for a mortgage. And if you don't qualify, they will be able to work with you to develop a plan to get you to where you need to be. First, we need to figure out the main components that a lender looks at when determining if you qualify for a mortgage. One factor that lenders look at is your credit. In order to get a clear picture of your credit history, lenders run a credit check. They will check for any discrepancies in your identification, how many times credit inquiries have been done, and how frequent they are. They will look at your credit cards as well as any other forms of loans that you have to see your balances and payment habits. How long you've had these different forms of credit will also affect the picture your credit check gives to your lender. As a general rule, lenders are looking to see that you have at least 2 different forms of loan or credit that you've had for at least 2 years. The lender will also be checking for any bankruptcies, judgments, or collections on your record. If your credit isn't quite good enough to qualify for a mortgage right now, you don't need to despair. Your lender will be able to look at your particular situation and help you come up with a plan to improve your credit over time so that you can qualify for a loan in the future. For example, some simple things that go a long way toward building good credit are living within your means and paying your bills on time. Another factor that lenders look at is your income. They want to be sure that you will be able to comfortably pay back your mortgage loan over time. When you go to see your lender, it is very helpful if you can bring your latest pay stub, a copy of last year's T4 or Notice of Assessment, a list of your assets, and a list of your liabilities. These things help to give the lender a big picture of your financial situation. They are looking to see that you are actively employed and to see your pay breakdown of regular, overtime, and bonus pay. This will also help them see whether you have funds for your down payment and where those funds will come from, as well as if you have any fallback funds in case of unexpected expenses or circumstances. It's important that your mortgage loan not put you in a debt situation that will cause you financial hardship. Because this is so important, your lender is required to do a stress test that will ensure that you are able to qualify for a mortgage at a rate that is either equal to the Bank of Canada's 5-year benchmark rate or the credit union's rate plus 2%, whichever is higher. In order to do this, your lender will determine your gross debt service ratio, which is the percentage of your gross income that is required to cover any monthly payments associated with your housing costs, including principal, interest, taxes, and utilities. Your lender will use a formula to determine your gross debt service ratio, and it should be under 32%. Your lender will also determine your total debt service ratio, which is the percentage of gross income that you will need to cover your monthly payments for housing, as well as all other debts and financing obligations. They will use another formula to determine your total debt service ratio, and it should be under 40%. Finally, lenders will look at your down payment when determining if you qualify for a mortgage. You will need to be able to put down a minimum down payment of 5% to qualify for a mortgage, and your lender will need proof of your down payment. If you don't have 5% to put down on your home and plan to cash in an RRSP, or if your down payment will be a gift from someone, there are other considerations that your lender can walk you through. Once again, your lender will want to be sure that you have some fallback funds in case of unexpected costs or circumstances. And you will also need to be sure to have enough funds to cover closing costs on your home purchase, which are usually approximately 1.5% of the cost of your home. There are a lot of things to consider when determining if you qualify for a mortgage. While this video has explained some general guidelines, it's always a good idea to make an appointment and sit down with your lender. They will be able to look at your particular situation and work with you to help you determine what level of mortgage your budget can handle.